We spoke in March. CBDCs were not very well known, and they definitely weren't very understood, but they've been in the news a lot since then, including a ban on them in a bill passed by the House called CBDC Anti-Surveillance State Act. And it's now sitting in the Senate, and I want to spend a little bit of time on that because it certainly made the news, and it probably prompted a lot of interest in the subject from people who didn't know about it. And we also have two presidential candidates who are talking about banning it permanently. But before we go into those developments, let's spend some time on what you laid out in the book. It was laid out in a really well-organized structure. And let's talk about the innovations that they bring to central bankers and the innovations they bring to the public payments marketplace, made comprised of the private companies. Because we in the US use digital payments as a matter of course, and they seem to work just fine. And so I'm curious what the proponents of CBDCs think that they bring to the table. And so let's just start with, what is a CBDC?
Well, fundamentally, it just boils down to being a digital national currency provided by the government. It's a direct liability of the central bank. And like a paper bill, so a $1 bill or a $5 bill, it's a direct liability. But unlike that, it actually establishes a direct connection between you and the government. So we're talking about the government is ultimately the one to manage your money, to oversee your money, to effectuate transactions. And like you mentioned, we have tons of digital options right now. You can spend money through debit cards, credit cards, PayPal, Venmo, Strike, cryptocurrency, and the like. And this is really only innovating in the sense of it's opening up the doors so that the government can be more involved than ever before. It might have been a different conversation if this was 30 years ago, but right now, with all the digital options we have, the main change here is that the government is involved with everything that you do.
And so what are the benefits that proponents think they're creating with the idea of a CBDC?
Well, to be as kind as I can, these are all great promises. Proponents say that it's going to improve financial inclusion, it's going to speed up payment settlement, it'll improve the application of monetary policy, and even strengthen a currency status. All good things. Taken at face value, those are all good things. The problem is that none of those things are likely to happen with a CBDC. And as I tease out very early in the book, these are all things that once you start to kind of pick away at the surface, you set aside that these are good things, but then ask, how does this happen? It really doesn't work in practice. A great example is monetary policy. How do we improve monetary policy? Well, one of the ways that proponents ultimately recommend a CBDC is that it'll improve monetary policy by increasing surveillance. You'll be able to see what everyone is doing and collect more data to make more informed decisions. In a model, in a highly stylized theoretical model, yes, that works. But when we're talking about the real world with real people like you and I who have real lives and rights that go along with them, you can't have an unfettered surveillance system in the hopes of just improving something down the line. There are very real costs that come along with that.
The title of the chapter that you're referring to is terrific. They serve no good purpose. CBDCs serve no good purpose. The financial inclusion is particularly interesting. Most people are not interested in a bank, or many of the people that are not banked right now would definitely not bank with a
Yeah,
CBDC.
and that's another perfect example is that I think it's about 70% of people who are unbanked, so they don't have a bank account. 70% of people who are unbanked do not want one at all.
This show is being brought to you by our sponsor, Trueflation. Professional investors and economists, and probably any casual observers, know that government inflation statistics are only an approximation of what real inflation is. Not only that, but the government has a conflict of interest because high inflation can be so damaging to the economy, the deficit, and our $34 trillion in debt. Trueflation collects over 13 million pricing data points. Most are updated daily to reveal inflation with precision for asset managers, governments, companies, and the general public. Check them out at trueflation.com.
And policymakers, while it's perhaps noble in that they want to help people who are without something, they need to remember that these are real people. These are not digits on a spreadsheet. If they don't want to have these accounts, then we shouldn't be forcing it down their throats. It's as simple as that. It's in the same way that we think about unemployment, we usually uh, qualify it by saying that it's studying or it's reporting the amount of people who are without a job and are looking for a job. We should be thinking about the unbanked the same way, that these are people who are without accounts but want them. And that number is much lower than what people typically focus on.
Hey, if you like this clip, please hit the subscribe button. You might also want to check out some of the clips I've posted with my many other guests. My interviews all address the simple question, how screwed are we? We ask experts about the problems that make Americans so pessimistic today, but we also explore why there's never been a better time to have been born than today. Join us for perspective on today's challenges and opportunities.